Why is the global economy failing? Is it possible that there is one institution that is responsible for the mess that we are in today? I'm going to answer that question right now. You came here for the truth, so let me unveil that for you. For a lot of people, they're asking the question, are we in a recession or not? Like, what should I be doing with my portfolio, my retirement account? I'm concerned about it. I think it's okay though, because my job is safe and secure. Well, it's not so black and white. We got to realize this. And I want to show you some details. I'm going to show you not one, not two, but three charts surrounding what's happening with interest rates and why this is so key right here, right now in 2023. Let's begin. First things first, talking about recession. Based on the recent data, the US economy is currently paused on the threshold between a significant mid-cycle soft patch and a formal cycle-ending recession. The industrial side of the economy, which includes the manufacturing and freight transport sectors, is already in a significant and prolonged downturn that likely meets the threshold for a recession. You look at manufacturing, you look at consumption, these different things have declined, showing us that if we look over here, we see recession. But if you look at, for instance, the stock market or maybe the GDP that they show us, it's a different story. And so that's why we got to break this down and understand, okay, forget all the labels. Let's not do that. Let's just understand what's going on. When I wanted to figure out the body, when it relates to bodybuilding, when I was big into bodybuilding many years ago, I did not go out there and look at, what is the best exercises for biceps, but I actually learned about the anatomy. I tried to understand each and every major muscle group so that I can build my exercises around the muscle group. And that might be a complicated way to do it when I could just say, hey, I'll just look at, this particular bodybuilder and I'll just have his strategy. But his strategy was built entirely different. So we have to realize that we got to do our own due diligence. And that's what I'm about to show you here. US industrial recession cuts diesel and electricity use. That's part of it. And that brings me to this. Lines stretch down the block at food banks as costs go up. The aid expires. Of course, people are suffering right now. Inflation is up, food costs are up, energy, housing, everything is up, and yet their wages are not. Okay, prices of groceries has grown 50% faster than overall inflation since 2020. I have seen your comments just on one of these recent videos, and I asked for examples that you had, and my goodness, it's everything. Have you seen, you look in the comments, incredible comments from incredible people all around the world. I live here in this city, in this country, and I'm experiencing this. Gas prices, energy prices, services that they use, everything is up. You look at the stats, it shows us 5% inflation, it shows us 4% inflation, 10%, whatever the case may be, and it always ends up being lower than what it is in reality. Whatever number they give us, we know it's actually going to be higher than that, okay? We can use different things, shadow stats and so on, but it doesn't matter. Ultimately, what we pay is what it is. And that's going up like crazy, and that's why people go into food banks more than ever before. We're also seeing that, by the way, it's not just, that was Boston, I believe. This one is Toronto. So it goes on in Canada, it goes on in the US, it goes on everywhere. And this is the kind of thing that we see all over the place, and it's frightening. Here you could see just line up, just a long lineup in a place where you have homes. The average home sells for over $1 million. At the same time, clearly, these people need food. They wouldn't be lining up in this lineup if they didn't really need it. Now, maybe they can get by or whatever. They're not destitute. But for a lot of people, this is like a requirement. And so we can see that these things are converging at the same time with the banking crisis. And let me explain to you. There is a direct reason, and one institution is responsible. Let us not forget, I'm going to remind you here, on this video. We're going to look at these charts, but I just want to show you something first. Fears over finances of almost 200 US banks. Leading think tank warns of risk of further failures after a week of turmoil grips American lenders. So you could see what's going on here. Surge in interest rate costs caught banks on hop and left many nursing Huge losses. Officials are concerned about the speed of the bank runs, fueled by social media. Oh, yeah, it's the social media's fault. 3 of 4 of the biggest US bank failures had occurred in the last 2 months. So you can see it's going on all over the place, of course, in Europe, in Asia, in the United States. Everybody is kind of worried. They're on the edge right now because, why? The same thing is going on. We just haven't heard about these banks. And there's one factor that's in all of this: interest rates. Historically declining rates until the recent spike, which we're feeling right now from 2022 into this year. Until the recent spike, real interest rates across most advanced economies had been steadily declining. So you look at that. What direction were we going? We were going down and down and down. And that is, varying depending on the different country and so on conditions. But that's the general direction. It was heading down. But now everything has changed. The whole world, though, went from reasonable interest rates to super low interest rates and kept them there since the financial crisis, basically all the way through, other than that little bit in 2018 where they pretended to increase interest rates. So then you look at this right now where they're increasing, and of course the markets are screwed up. Of course the banks can't handle this. And of course inflation has been this policy for so long, and a little bit of an increase in the interest rates just isn't going to cut it right now to actually stamp down on that inflationary fire. US interest rate hikes. You can see right here, change in effective federal funds rate over the last little while. It has been, the rates have risen faster than at any other time in recent history. So you could see that they're trying to counteract what has happened over the last so many years. You are not going to reverse the damage of keeping interest rates low for this long on a global level, mind you, and increase interest rates for a year, and that's it. Oh, that's enough. We've had enough. Absolutely not. You've got to take your time with this and realize, at least in what the words of the central banks have said, oh, we're going to keep them here for longer. The markets, though, they're not saying that. So these are extremely important, related to everything from why people are going to those food banks to what we are seeing with the bank crisis. That bank crisis is not over. Anybody who tells you that, please don't believe them, all right? This is another one that I wanted to show you. You can see the real interest rates of major world economies, and you'll see very different things, okay? Just looking at the real interest rate. In order to control inflation, the Brazil Central Bank has kept interest rates above 10% since February of 2022. And you look at this, Federal Reserve, you can see the Federal Reserve has raised interest rates 10 times since March 2022 to tame inflation, 0.36%. Okay, according to that, that's real interest rate. And you just look down this list and you could see on the opposite end of the spectrum, Argentina. Despite a 78% nominal interest rate, Argentina's real interest rates remain negative due to the country's annual inflation of over 100%. Crazy. And you also see this, Netherlands, Czech Republic, Poland, Belgium, Greece, Italy, Austria, Germany, Spain, so on. Like a lot of these European countries are in the negative as well. And so we cannot exist in a world in which we're being thrown around like this. People are being hurt so badly by inflation, and unfortunately none of these central banks seem to be able to cope with the crisis because it's global. It is a global crisis, and that's what makes it even more difficult. After the 2008 financial crisis, regulators and lawmakers went to great lengths to make banks safer and less vulnerable to market swings. By the way, internally, I'm laughing right now. Banks generally take less risk than they used to on their trading desks and in the kinds of lending that they do. They usually have more capital than regulators say they need. As of the middle of last year, more than 99% of community banks and all regional banks with assets of up to $100 billion reported ratios of capital to assets above their requirements. Oh, wait a second. How did we have a problem then? I thought everything was okay. They did stress tests, right? Well, yet the problem caused by rising interest rates in banks' portfolios, a central part of this current crisis, isn't a permanent one. Banks' bonds and loans yielding less than today's market rates, which have dropped in value, will eventually mature or pay down. That will give banks fresh money to invest or lend at much higher rates. Oh, but there's just one problem here. In between now and then, there are going to be failures, maybe smaller ones, but there are going to be failures. And while the market can move on to the next story and simply, think about something else, let's be very clear in that this is not over. Increasing interest rates creates an issue you cannot get around. Now, just really quickly, I want to move through and show you that what's happening is global. All over the place, we are seeing problems from one thing or another. And what can you do about that? I'll talk about that just in a minute. Let me just show you here. The Monetary Authority of Singapore on Friday imposed additional capital requirements on DBS Bank. You could see the country's largest lender. They want to essentially make sure that they don't have these issues themselves, even though that's such a strong country generally. Australia pledges $10 billion in budget to ease the cost of living. Yes, that's right. Increase the budget in order to make sure that we don't have inflation bother people. The problem here is that you left interest rates too low for too long. People are struggling. They can't buy a home. They can't pay their rent. Everything is going up. When you threw billions and billions and billions of dollars, every sector, everybody, except the people who got the crumbs. And then you realize, wait a second, handful of groups were largely getting the benefits, and everyone else gets screwed. Does that surprise you though? My goodness, you got soaring rents in Singapore. Saudi Arabia's budget slips into a deficit as spending accelerates. So they're expanding. In Saudi Arabia, they want to go away from just being a one-trick pony. They're trying to expand out from there. They're doing business more than ever before with China. This was an interesting one. Underground tangle of German wires drags $1 trillion green push. This is interesting. They're digging up under the ground. They're finding all these wires which were put in there dating back to the Third Reich, if you could believe it or not. And so they don't know what anything is. It wasn't labeled and so on. So now they have an issue, and that's billions and billions of dollars worth to get their infrastructure up to speed. And so the point here is that every country seems to be dealing with things, and the way that they're going to get out of that. Do you have a guess? How does a country get out of a problem? Or shall we say, kick it down the road? Maybe they're going to print some more money. Maybe they are going to actually actively engage in, stimulus in some way. And there are going to be groups that benefit from it. So you look at where the stimulus money goes, and that's how you do it. You follow the money and you realize that these groups are going to win, and I'm going to tag along. Maybe there's a moral issue. Like for some things I just wouldn't invest in because it's morally wrong, in my opinion, like Big Pharma, for instance. So that's just one thing, but you do what you want, okay? It was obvious. I called it. I said 2020, look at what's happening. I said as soon as they release those things that go in there, I said the stocks are going to boom. And what happened, okay? And that's what they did. As soon as they said we have like evidence, this is going to work and all that stuff, the stocks just boom, they went crazy. That was so obvious. That was so obvious. So if there wasn't a moral thing, you could have done that as well. And I covered that here on the channel. Shipping data shows large amounts of oil are heading toward China. China's picking this up from different places, including the US. They talk about it in here. And I thought it was interesting because we're talking about recession. We're talking about slowdown. And China is getting more of everything. Crazy. China seems to be the exact opposite of all the other countries. They are loosening their lending, whereas other countries are tightening their lending. A lot is happening right here and now. So that's what I wanted to cover here. I hope you appreciate it. Look, if you want to have this, I covered a few points, but you've got to understand what you need to do. In my books, I explain that all in depth and detail, but you've got to figure that you got to realize, like, what am I investing in? If you're aiming to make, let's say, 5%. You want maybe at most 10%. You might be able to get that in traditional investments, okay? Because all you want to do is maybe preserve, keep your wealth through inflation. But if you're trying to actually, increase your wealth by 50% or your investment portfolio by 50%, you just can't do that in these traditional assets. That's why I talk about business. Business, especially like e-commerce, is a way to hold onto an asset, tax advantages like no other, all these different things that you can expand that value by 50%, 100%, by 200%, all these different things. That's why I talk about it all the time. If you want to know more, let me know. David at The Money GPS. And that's it. I'll see you tomorrow. Take care.